Hey, Bulls and Bears, it is Wednesday, December 22nd, 2021. Thank you for being here. The economic pain for so many people is continuing to get worse. Today, we're going to talk about the skyrocketing rents. Rents just went up even faster than we previously reported. So, yes, things are continuing to get worse. And with home prices continuing to climb, it's only going to bleed over into the rental market. So, expect to pay more for rents. And I'm not sure why there's so many channels on YouTube saying that real estate was going to crash before the end of the year. There's nothing out there, nothing at all out there to stop this situation with rising prices, rising rents, rising home prices, and it's all based on the debt model. So as debt continues to climb, expect prices to go higher. The only way to stop prices from going higher and the cost of living from going higher is to stop the issuance of debt, but that's not being done. In fact, they're doubling down on the debt. And we'll get more into that here in just a few minutes. First, please make sure you are subscribed if you are not subscribed. Only about 4 out of 10 people that watch the videos are actually subscribed. So please make sure you hit that subscription and notification bell. We've got some very important news to cover, and I think it's going to affect you or someone that you know with what's happening here and what we're about to see in 2022. Let's go ahead and get started. Start right here. CNBC: rents for single-family homes are rising 3 times as fast as they were a year ago. 3 times as fast compared to a year ago. So prices are continuing to rise faster, not just rising, they're rising faster than they were. And we're going to continue to keep an eye on this. Now, maybe in 3 months from now, we'll look at it. It'll say rents are up 5 times as fast. It's going to keep on going. Nothing's being done to stop this inflation monster. And in fact, they're fueling the inflation monster. Single family rents in October up almost 11% year over year. And that's over 3 times 1 year ago when it was up 3.2% year over year. How many people do you know that are getting an 11% raise or wage increase from last year? All right, and this is just one expense. Look at all the other expenses. And there's a lot of different aspects to this that we've discussed on this channel many, many times. You have institutional buyers coming in and bidding up the price of homes. Therefore, more people are forced to rent, therefore causing a bigger crunch in the rental market. Of course, we have the supply chain issues, the labor crunch, preventing enough homes from being built. And the bottom line is just too many people, not enough homes, and too much debt, and too many non-owner buyers coming in and distorting the markets. Next, this is out of ABC. Evictions are on the rise months after the moratorium ends. So maybe we'll start seeing a little bit of an effect of the evictions now taking place. But this is really, really sad. People getting evicted from their homes around the holidays. There are still some places with eviction moratoriums in place, but for the most part, it is finished. And this is being widely reported here. KTLA: evictions are increasing around the U.S. And we see a story here of someone that has that had their rent increased by 60% the same month as he lost his job as a truck driver. And this individual said the following, quote, "I never thought I'd be in this situation. I've been working my whole life." And he lost his leg to diabetes recently. He suffers from congestive heart failure. And sadly, there's millions of people just like him. What are these people going to do? People that worked their whole life all of a sudden now have no place to live. Right? And this is because of the debt-based economic model where economic growth and what they call GDP is dependent on lending and debt and people running up credit cards and borrowing money. And people like this in high-priced areas are going to need to move to a lower-priced part of the country, and it's hard to do. It's hard to relocate, especially when you have family. Statistic recently came out with some numbers here as to the increase in the evictions here. Houston leading the way, and we see Phoenix as another bad one. Dallas, Texas, Fort Worth, Texas, Indianapolis, Columbus, Ohio, Jacksonville, Florida, Philadelphia, all rising and having more evictions versus just a few months ago. And it seems like bad news wherever you look. AP's reporting here 2021 is on track to surpass last year's as the nation's deadliest. The nation's deadliest, but yet the stock market keeps climbing. We're still being told the economy's great. This is an amazing economic recovery. Everybody's doing fine. Everybody's recovering. And with all these hospitalizations, how are people handling the medical costs? If you don't have insurance and you end up in the hospital just for a short amount of time, you could get financially wiped out real quick with the cost of medical today. The current administration extending again student loan payments, exactly what we told you would happen. We told you they're going to have to extend it. Students are not in a position to be able to resume paying their student loan payments, and they had extended it previously to February and now again out to May 1st. And guess what? I think they're going to have to extend it again in a couple months. We'll check back on this, and I'm sure it's going to be pushed up to July and August because people are not getting ahead. People are not making enough to go ahead and start paying down their debts. In fact, debt is climbing for the majority of the population. And in more expensive areas like California, for example, we have a lot of people that are using about 50% of their income just for housing. Look at this chart right here. The orange area here at the bottom, over 28% of renters are paying over 50%. Shelter costs exceeding 50% of household incomes, right? Over 28%, and 16% of homeowners, right? So a lot of people going out and buying homes right now at these prices. You're going to see most of your paycheck, 50% of your paycheck in this case, eaten up by just your housing payment. And tell me what happens when something goes wrong when 50% of your income is going towards your housing payment. What if you have an unexpected medical expense? What if you have a car repair? Well, you guessed it, it's going to be more debt, more people putting balances on their credit card, and eventually this is going to lead to disaster. And I think 2022 is going to be a storm of bankruptcies. I don't think it's going to happen until later in the year 2022. But I think 2022 is going to be a rough year for a lot of people. We're going to wrap this up right here. Thanks everybody for watching. Keep stacking, stay well, stay safe, stay prepared. Bye for now, everybody. Peace.